New Ethereum price data just in, which indicates that Ethereum is likely to go above $1,700. So we're going to reevaluate what we did just the other day because there's new information, which means we need to stay flexible and nimble and really listen to the market. So if you like today's video, like, subscribe, hit the bell notification, and let's dive straight into Ethereum. I'm on a 1 hour chart right now with Ethereum, and the key thing you want to really know about the markets is they tend to move in fives and threes around 60, 70, 80% of the time. It's just a buying and selling psychology. So what we're going to do, yesterday, I think it was yesterday, we said the market looks like a nice wave, one or A, two or B, and then there's three or C. However, we've got some new information over here, which actually tells us, and you want to get familiar with buying and selling psychology, which is reflected in the price, and it tells us what's likely to occur next. So when we're trading, I'm always asking, and you should always be asking, what should the market not do if it is to continue in the direction that we think? And if it does that thing, we need to reevaluate it. That's what we're going to do today. So let's just start off with the momentum. So what we said the other day was the weekly momentum is strongly overbought. So the upside is limited. So we're nowhere in the range where a top is due for some type of correction, right? We know that based on past momentum behavior, and we covered that the other day. However, the daily momentum has made a bull reversal, which indicates there's still some upside movement. But really what I'm going to focus on today is pattern. So I'm going to cover something called Elliott waves. Now, it's one of the 4 secrets. So I've actually created a 4 secrets masterclass. It's free, it's in the link below. It'll take your trading to the next level. But it's really how to read the market psychology in a logical, practical, mechanical way that helps us make decisions. So we're going to focus on this part of the market. So the other day, what we saw with the market was Ethereum made this big move to the downside in a 3-wave structure. And the thing that we said was, we didn't know this was going to occur, and there was no way of knowing that. But what we did say was, if the market crosses back over into this range, then we know this is not, or is likely not going to be a top. So then we need to reevaluate. And that's exactly what's happened. It's actually gone into this range as opposed to a 5-way sequence to the downside. So now we just need to reevaluate. So what we're going to do, keeping it really simple, is just delete this. And this is the reason I often use a question mark to say it's not been confirmed. So this, I'm just going to move to the side. So when I'm reevaluating this now, and I'm being objective, I love Ethereum. I think it's fantastic. Blockchain, Web3, whereas, decentralized finance, etc., etc. But when we're trading the markets, it's fear and greed that drives the markets. So what I'm looking at now is ignoring this for a second. So even if I just delete this for a second, and I'm looking at this with fresh eyes, we've obviously got to move up. We got some type of correction. We got this very strong move up. But I'm looking at this now and this new information. So before, it looked like this was a wave 4. But now, the fact that we've got this, what's called a price overlap, this looks like the wave 4. So what does that mean? Well, it means this is likely to be a full wave 3. Whereas first I thought the wave 3 was here because it was logical. But based on this new information, we go, actually, that voids this. And it's likely that this is, in fact, the wave 3. So now let's just update the chart so we can get really, really clear information and an insight into what's likely to occur next with Ethereum based on this new information. So it's likely this is not the wave 5. We're probably going to get one more move to the upside. It's likely that this is, in fact, the wave 3. This is, in fact, the wave 4. Now, this is one of the reasons why a lot of people find it very challenging with Elliott waves, because they get very fixed with their opinion of the market and not staying flexible and nimble from a business perspective. And the winners are the ones that stay flexible and nimble and can just look at what is happening and literally what is happening. So now, if we look at this, we got this nice move up. 1, 2, 3, 4, 5 over 3. That's what it now looks like. Why do I say that? It's purely because of this new information. At this point, this first 3-wave moves down. If this had happened and this had happened, it'd be a whole different ballgame. But that's not what happened. What happened was a move, aggressive move to the upside, overlapping into the previous wave structure, which says, well, actually, that would indicate that this high is going to get exceeded. Hence, At the beginning, I said we're likely to see Ethereum go above $1,700. We also have a daily bull reversal. So that also indicates we're going to be sideways to up for a few days, and is likely again we're going to exceed this high over here. So now let's just finish up with some price projections for the high based on logical, typical buying and selling behavior. So the first thing we're going to do is something called an external retracement. This is really, really powerful because it's basically the relationship to wave 4 and wave 5. And by the way, in the 4 secrets, I cover this in a lot of detail. It's one of the most reliable ratios that will give you a really good feel for what the market is likely to do. So let's just quickly do this. We're going to do external retracement. It requires 2 clicks. You just need to know the ratios, what ratios in particular. And it's 1.272 and 1.618. So this is the likelihood of Ethereum going to, let me just see if I can see this number, it's $1,714 to around $1,767, thereabouts. But then we want to look at something else. Wave 5 and wave 1 to 3 have a relationship. Oh, what did you get? Come again? Well, here's wave 1 to 3, right? And here's wave 5. It has a relationship. And how it's behaved in wave 1, 2, and 3 will give us a good feel for where it's likely to get to, and if it clusters over the previous 2 ratios that we've drawn. So the key, I'm not going to go into much. I covered this in the masterclass, but I'm just going to quickly do this metric so we can see that we've got a lot of confidence because it's high probability we're going to exceed this high. So the immediate bias is on the upside. Here's the 2 ratios. So now we've got these 2 zones. We got this zone over here, and we got this zone over here, which are both probable, highly probable. And typically what tends to happen is if the market does reach the first zone and it breaks this zone, it will typically just go to the next zone. There is another ratio above this as well, but this is the highly probable zone, keeping in mind that this wave 3 is very extended. And when wave 3 is the obvious extended wave, wave 1 and wave 5 tend to be very similar to one another. So I'm expecting either a 5th wave failure, basically that's a bit more advanced, but what that means is if Ethereum fails to exceed this, either it's going to be that, or we're going to get an overextended wave 5, I'm going to talk about this in just a second, and then top out over here. So just be on high alert. They're probably going to get a bit more sideways to up movement. Breaking this high is reasonable, high probability because of this momentum, pattern, and price position, and based on this new information of this price overlap. Now let's just finish on really zooming into this section and see what it looks like. Because what does wave 5 typically do? Wave 5 typically break down to a 5-wave structure in itself. The same way we can see this wave 3, if I just make sure this is really clear. Sometimes I know if you're brand new to Elliott wave theory, it can be a bit bamboozling, but everything in life is difficult before it's easy. If you look at this blue line, this is the wave 3, and it breaks down to a 1, 2, a clear 3, 4, 5. Yeah, this wave 1 is not that clear. There's a couple of different wave counts you can do, but really this is quite obvious. This ABC over 4 is quite obvious now, and this impulse is quite obvious, but it breaks down to a 5-wave structure. The way we see that is going to be similar to this wave 5 over here. It will typically break down to a 5-wave structure. That can give us a valuable insight, and we can really narrow down profit-taking targets, going long targets, being patient targets, etc., etc. So now let's just finish on this. So the reason it might be a 5th wave failure is because we've already had this aggressive move to the upside. We've already had this initial impulse. Looks like an irregular ABC over 2, and there's this powerful, what looks like to be a wave 3, overlapping into this wave structure. We've had some type of pullback, which looks like a wave 4, and we're more than likely going to get a wave 5. And this is the target zone, and it'll be an overextended wave 5. Let's just draw this out. So there's a couple of things you want to take into account over here. Again, do excuse me if I'm flying over your mind where it's like, Jagir, slow down. This is my first time, or, I'm new to Elliott wave theory. This is hard to get your head around. It's why I've created the 4 Secrets Masterclass. Again, study this. It's free, and it's the most beautiful thing. If you can do it in a practical, logical way where you can look at the market through a particular lens and see what other people are not seeing, so you can get a good feel for what's very likely to occur. So when I'm looking at this now, looks like a nice move up. We've got this ABC down. It looks like a very aggressive move up. Another ABC down, looks like a wave, potential wave 4. I'll put a question mark there. And then we're likely to, this is the target range, right? Whether we'll reach it or not, we don't know that. There's no way of knowing that. But let's just now just change this just to match the color of the lower degree wave count, which is green and minor. So what I mean by that is when we're looking at the wave 3 breakdown, like we're looking at the wave 3 breakdown, this here is the same wave count or degree of count. Degrees of counts is really important. So we're doing multiple degrees of counts here. And what we're going to look at, it's maybe a few days. I'm just going to clean this up because I got it all the way over here. It's more likely going to be over here. What we're looking for is something like this. And I'm going to finish on one last thing. Oh, hopefully this doesn't look random. There's a lot of logic and science and art involved in this. So let's just get rid of these lines for a second, just so it keeps it a bit cleaner, so we can just look at it. Is we're going to use that same relationship, wave 1 to 3, projected from 4. In other words, wave 1 to 3, projected from 4. And the typical maximum is 100%. In other words, this degree of movement from here to here, if we project that from here, that's the typical maximum. And we anticipate it's going to be somewhere in this region. But let's just draw it out. Let's just do it from over here. We're going to take this low to high to low. The two most typical is these two ratios. We want to be aware of these. But there's one other ratio that we want to be aware of, which is a typical maximum. Now, it doesn't mean it can't overextend. It can overextend, and the overextension would be the 1.618, which is in the next zone. So we've actually got 4 zones over here. So the absolute minimum, if it's a 5th wave failure, I'm hearing myself speak, by the way, and I'm like, I hope I'm not frying your brain, is the absolute minimum is this zone here. So we're talking about just under $1,700, and this is also under $1,700. But higher probability, based on the larger degree wave count, is this zone over here. So we're talking around the $1,700 mark or just above. And then the next zone above is over here. So hopefully that gives you valuable information on Ethereum. Method to the madness. But we should anticipate 1, 2, 3, 4, 5. What would void this? It's the same thing as before. It's an overlap into the previous wave structure. So if I just draw this line over here, by the way, I'll make this chart available. I'll save this so you can download it for free. You can upload it into your own trading view and edit it as you see fit, because sometimes it's a bit difficult to do this at first, but everything in life is difficult before it's easy. So if it does overlap, so this is what I would actually do. So if I was trading this and I've got a long position order in play, I wouldn't actually draw a 1, 2, 3, 4, 5. What I would actually do is I actually like to write the words 1 or A. What it does is it keeps me neutral and unbiased. I like to say 2 or B. I'm going to tell you why. Because the whole reason for this update is because this is what we did the other day. And this is 3 or C. Now, the reason we write 3 or C is wave 1s and wave A's can look the same. Wave 2s and wave B's can look the same. Wave 3s and wave C can actually look the same. It's really what happens next. So the initial part of a wave 4 can look the same as the initial impulsive move to the downside. So right now we've got this first move down, another move up, a move down. Now, if it overlaps into this region over here, which is borderline doing, that will give us the first strong indication that this is in fact a wave 4. However, just staying neutral, because again, What we're looking to do with the markets is make money consistently without having to know what's going to happen next. Right? That's just the name of the game of trading. If, for whatever reason, we don't need to know why, the price goes into this range over here without exceeding this high, then we go, okay, it's not a wave 3, it looks like a wave C, and then we just need to reevaluate again. But the probability based on daily momentum, based on this being pretty impulsive, based on this being, looks like an ABC, based on the wave overlap, is more likely that we are going to see this happen. Well, hopefully that makes sense. One of the key things you want to get very used to doing is not getting too attached with your thesis. In other words, you want to be neutral, where we go, right, if the market shows, oh, actually, it's not going to be going down, it's likely to be going up, you want to be able to switch and trade that. And then the reverse is true. You believe it's going to go up, but then new information comes into play where it goes, well, actually, that's now voided. We now need to short the market, and we can flip and go, we short the market. And that's just the art and the science of trading. It's really, really important that you stay flexible and nimble. And there you have it. So Ethereum, is it going to go over $1,700? Let me just save this so you got access to the latest version. I don't know, and neither do you, and no one knows. And that's the key secret when it comes to trading. It's the same as flipping a coin of heads or tails. No one knows if it's going to be a heads, and no one actually knows if it's going to be a tails. But you can place a bet with tight risk management, and when you're right, even 10, 20, 30% of the time, as long as when you're right, you're making a lot more money than when you're wrong, then that is the art and the science of making money from the markets. Let's finish on a quote. Don't forget to like, subscribe, hit the bell notification, and let's go with, actually, let's loop yesterday's. Right? Leonardo da Vinci. Simplicity is the ultimate sophistication. So keep it really, really simple. So it's simple, logical, repeatable, and recordable. Because you want to have a mechanical, objective business plan when you're trading, so you can repeat it for years to come for hundreds, if not thousands, of trades.